We're okay to go?
We're good to go. Sorry about that. It took me a second to get the screen selected. All right, we're good. Sorry, I didn't have my mic on. We're good to go.
Okay, great. So, firstly, I'm using the December contract as agreed as of today. So all the levels and everything I'm talking about will be the December contract when I get to the charts on using the ES. What happened in China overnight was pretty interesting actually, because we had a real divergence in the sectors. The Shanghai ended up down about lost it now, but I think about 2.7%. But what was interesting was within that, the financials were actually up 0.1%. Tech was down a really big 8.7%. And I think that divergence in the sectors is quite healthy, because it shows that people are actually buying some stuff and selling other stuff and not just panicking and throwing everything out. So interesting performance. The Nikkei was down 1.63%. Other markets were mixed. There were markets that were up in Asia as well. Europe's had a mixed performance. It was mostly up. It's now mixed. It sold off a bit. There's nothing on the economic front today. The big focus of the week, obviously, is Thursday, 2 p.m., the FOMC rate decision, followed by the press conference. There's stuff in between. Tomorrow we've got retail sales and other things, but the big focus, obviously, is Thursday. So moving to the charts on the monthly, this is actually the continuous contract on the big S&P contract. Not much to say on the monthly, except we've got an inside month. On the weekly, I'm using the same contract, and this is showing balance, I think. On a weekly basis, we're balanced. I think what's notable is that the highs on the week, we have these highs bunched together. And if we do, after the rate decision, trade up, that could create a firecracker effect. I wouldn't expect that to happen before Thursday, but just worth noting and keeping an eye on. Turning to the daily, and the daily I am using the December contract. So on the daily, we have this big box, which now the levels have changed. We're looking at 1823 to 1982, and we've been stuck in this range since the big market sell-off. And we also have this quite tight two-day balance, 1925 to 1955, shaded in yellow. So we can apply balance rules to that. Turning to the profiles. Okay, so the profile on Friday, it was an inside day. It was fairly rotational, but certainly had an upside bias and closed higher than it opened. The volume was 3.2 billion, which is really low by recent standards, but it was the anniversary of 9/11, and it's also Rosh Hashanah, so there were reasons for it to be low volume. The value area was overlapping lower, but it was very overlapping. I mean, it was almost the same as Thursday. The low was good. The high, we have an incomplete auction because the end period, the runoff period, was the highest period. So we have an incomplete high. The single prints above this 47.75 level could be considered as a spike. So we should keep an eye on that this morning. The PAC was only 6 wide at 1940.50, so I wouldn't attach much importance to that. There is a naked PAC above. Again, it's not particularly prominent, but at 1959.50. There's still a gap below. So below the 2-day balance low 1925 down to the 9/4 high of 1921.50, there is a gap that still remains. The balance, the 2-day balance, if I make it smaller so we can see, the 2-day balance runs from 1925 to 1955. Surprise, surprise, that's the the overnight halfback there. So obviously everyone's got their eye on that sort of level. There were plenty of anomalies. The afternoon pullback low was at 1935.50. I think if we trade down and down through the spike, that'll come into play as an important level. And if I had to guess where stops were, I'd say there would certainly be stops below that afternoon pullback low. There would probably be stops also below the 2-day balance low of 1925. And on the upside, there's probably stops above Friday's high and above the 2-day balance high. The overnight inventory, if I bring that chart up, the overnight inventory, I would say, is net long. It's actually right on where we closed now, but most of the activity has been above. So I'd say it's net long, but it's not massively long. The overnight POC is currently 1954. That's the volume POC. The inventory of the general market, I'd say it's on the long side, but I don't think it's anything excessive. I don't think we're excessively long in the general market. I think that for me, the ruling reason is the 2-day balance. The spike is fairly small, so I would say I lean way towards the 2-day balance rather than the spike as the ruling reason. And the focus of the week is just that FOMC decision on Thursday, and I wouldn't expect too much to happen before then. My scenarios, so number one, we open in the spike and we test Friday's high. We either fail and target the afternoon pullback low from Friday, or we accelerate higher. Number two, we open below the spike and gain acceptance below the spike. That would be negative. And again, we test the afternoon pullback low. And number three is that we open gap higher, which was looking like earlier. Now we're below the Friday high. But if we open gap higher, obviously we apply gap rules. So please jump in with questions and comments.
Simon, I want to make a comment about the overnight inventory. You had said it's net long. If you wouldn't mind throwing that back up there for a second.
Sure.
Okay, I think this is a good discussion topic, and it's too bad there aren't more people in here. But all right, so we traded higher most of the overnight. It sold off somewhere in the middle of the night. It went higher again, and it sold off. I would say that the long are mostly corrected. If anything, there are probably new shorts in there. But I would say the inventory is mostly corrected, and I think that's something Dalton has said several times. When the inventories come back to kind of where it started before. Of course, there could be new shorts who shorted, but assume a lot of that's people taking profits. So I don't know what different opinions are on that, or how to even really know once the day starts. Maybe if there's new shorts, maybe a test to the upside would be correcting shorts. I don't know.
It's certainly debatable. I think where the overnight inventory is really useful is when it's very clearly 100% long, or very clearly 100% short, or very clearly, almost like 95%.
Right.
And then we can expect an overnight inventory correction. And if we don't get one, it's a very strong signal. When it's debatable like this, I mean, it's interesting to debate, but I also think it's not important because it's not a strong factor in the market, because you're right. I mean, you can say it's largely corrected. I would just say it didn't go much down. So if you were long, there'd be a lot of people who weren't stopped out yet. But you can also argue, like you did, that a lot of people have thrown their inventory out, or even got new shorts.
Yeah.
Yeah, I actually agree with both of you. I think I had termed it in my prep as neutral to slight long, perhaps. But I also agree. So I agree with Ben in that regard. But I agree with Simon in that in these scenarios, I don't think it's terribly important. it's I don't think it's a factor that's going to greatly affect the market, going forward today. The situations where you have clear imbalance and clear overnight inventory imbalance is I think a lot more relevant. The other thing I wanted to say was and I kind of picked this up from what Matteo had pointed out on Friday through Simon, was that last 2 day balance that Simon referred to is pretty much just been a rotation within that late day spike from Wednesday. From in the D's contract, basically from the 1965, 1956 level on the upside to around the 19 quarter level on the downside. That late day spike basically incorporates the last 2 day balance as well. So it's kind of like you have this 4 day balance of 19 and a quarter up to like 1978 quarter, and like within that balance you have this kind of lower rotation, or the lower section of that balance. So that is the spike from Wednesday, and then the ranges from Friday and hold on, the ranges from Thursday and Friday within that spike.
It's interesting just looking at Simon's chart here as he shrunk it up. How many days have ended with something approximating a spike or spike in just the last week? Just it's an interesting thing. Looks like there's 4 of them.
Yeah, that's a good. Sorry, Ben. That's a really good point. But and what does that mean?
It's just interesting. That's all. I don't know what it means. Well, I think it means something. How to use it, I don't know. I mean, it's I think it probably means that it's just a lot of going into the close. There's a lot of people getting out of positions or something. And I think that
don't fade the direction late in the day.
Well, there you go. That's a useful way to use it.
Yeah, I mean, no, it's a rarity to have so many spikes. That's for sure. But maybe we should email Jim, because I'm not quite sure what it's telling us, but it's definitely a rare bird.
Yeah, like 3 of the last 4 days, and it's not the same direction either. If 3 of the last 4 days we've closed with a spike up, actually 3 of the last 4 days. You had last Tuesday it'll spike up and close close to the highs. Last Wednesday spike down, close close to the lows, and then Friday spike high and close close to the highs. Dear Jim.
Hey Simon, you write me. You don't say Dear Ben.
He says Dearest Ben, doesn't he?
Yeah, exactly.
Going to say something. I think that we should take a. I mean, I am going to take a spike as my reference for this morning, from 45.75 to 51.75. If we open above that, I think it's quite positive. And if we find acceptance below 45, I think it's very negative.
I wanted to mention, Gilbert just popped something in the chat, that Friday's quarterly witching option expiration. All I can say about that is great. Combined with Thursday, I don't know. It's going to be interesting latter part of the week, I think. Well, I guess I could share it on a chart. I was having some issues with some chart things this morning. Something that I watched, the Shadow Trader weekly update, or whatever he calls it. He does something every Sunday, and it's worth watching. Let me share my screen here just a moment. Okay, hopefully you've got it. This is a continuation contract, so it's including all, and it's 24 hours. But if you notice this like rising wedge here, he was really not expecting us to get outside of this, to break below it, or his something like this, until Thursday, which makes a lot of sense. So that would either lead to today possibly a very tight inside day, or higher. So I'm actually kind of neutral to higher, in part based on this, and that's just something to be aware of pattern wise. And you're getting compression in here, and it does make sense because if there's news that pushes the market one way or the other, you will get probably an explosive effect one way or the other outside of these trend lines. So I think that makes also, now I don't know how to, I usually use the pit session lows for everything. This has the low at 37.25. I'm not looking at my market profile, so I'm not sure what it was Friday, but I think that makes like Friday's low more important. I also wonder that also would make for the afternoon pullback low more vigorously defended if we get down there. And I would say if the confidence is low and the tempo's low, if we get down there, I think that it might be a buy, possibly. It's a way to play it. I wouldn't want to put a limit there myself, but if it came down there and started to bounce up, I think it would be probably worth something to try to capture the bounce. Just a trade idea.
Has anybody mentioned that the buying on Friday was kind of weak because of the?
Simon touched on the fact that it was well, you know what I'm saying. Can't say that word very good.
Oh yeah, yeah.
And it was pretty thin. There wasn't as much participation, and I forgot what he said. It was Rosh Hashanah and something. Oh, the contract expiration. So
the low was weak.
or rollover.
We should carry that forward, and the buying in CD and IJ isn't very, very strong. I mean, we have one tick. They bought the lows of the previous period twice, so I don't think it's very strong buying. They could take it up. I mean, before very important news, I found out that sometimes market likes to anticipate. They think that the Fed is going to say yes or no, and so they decide to take the market up. They anticipate the move, and obviously, when the news comes out, they all get in trouble. But sometimes it happens that market just flows up or down without any real strength. Everybody thinks that Yellen is going to say something, and so it goes up slowly and weakly, and then it will probably come down. That's something I was looking for.
Okay, I'm going to stop the recording.